why most people lose money when investing. It's very simple, actually. Because, one, they are trying to beat very smart people. When you get into this game, understand that you are trying to beat the best in the entire world. If you think that you are greater than the S&P 500, you are thinking that you are better than some of the smartest people in the entire world. To beat the S&P 500 is something not even done by the 90%, 80-90% of fund managers. Only the top 10%, very few of fund managers that do this professionally beat the S&P 500. Only about 10%. So, what you're saying when you decide that you can be an investor and you can make money investing by moving your funds around, thinking that you can go outside, investing in a typical 401k, investing in market averages, is saying that you are smarter than very smart people. But that doesn't mean you can't do well if you figure out a few small minor things in the way you look at it that can help you get an advantage on those very smart people. Because these very smart people, they manage billions. Even sometimes trillions of dollars. So what does that mean? Well, that actually gives them a disadvantage. Because when you're trading that much money, you trade quarterly. You're expected to show reports every quarter that show how much did your fund go up or down. A huge disadvantage compared to retail. That's one. Two, when you do have that much money, you are questioned on every single order you place. So, one, you're being judged often. These trades cannot be over long periods, showing extreme volatility. But retail, guess what? Your advantage is you don't have that much money. And now, you're probably thinking, so what do you mean? You're telling me I'm against very smart people, but you're telling me I have an advantage. Yes. But that is only if you're among the very few who have the discipline to be against the market, against what everyone thinks. Because when do you have a huge advantage? Historically, when the market is going up, everyone wants it. Everyone is seeing everyone in their neighbor, new cars, new house, getting new stuff, their 401ks are going to the moon. Everybody's happy. But if you went to the grocery store and the same thing you were going to be buying in 1 or 2 years was twice as much, would that make you want to buy more? No. So, when the same thing you want to be buying for years and years, these superior companies, NVIDIA, Apple, Microsoft, blue chips, Berkshire, that's always going to be around, is down. A bad news event. A macroeconomic downturn. Why would you not want these things when they're on sale? And that is why most people lose money. Because it's so difficult, for myself included, to look at the market and when something is at a discount price to decide it's a sale and not a permanent downturn. To look at it and say, for instance, initial Trump tariffs. What happened? Crash upon crash, crash. Everything we know was crashing in the market. Extreme downturn last April 2025. Everything went down. But for the few exceptional people that were able to overcome their emotions and decide in the market, what is exceptional? What is always going to be around and has very few challenges? Companies like that are exceptional. And those who were able to be disagreeable to the consensus of the market and get in at those companies for prices most people thought were unreasonable, They're like, it's going down so much. But yet, those people that invested during that time, they were the biggest winners. And the thing is, at that bottom, the sharpest upturn is usually from the very bottom to the middle. To the previous high. So that high came down from. That's usually the sharpest upturn. Steepest. Lots of gains. Crazy gains. People made exceptional money during that time by simply being able to be against the consensus, to be among the very few that could go against the crowd. So that, in conclusion, is how you can hope to beat the market average, how you can hope not to lose money. But what I tell you is, when embarking on this endeavor, to not lose money, to be among the few that beat the market average, is that you must be insane. You must be a little crazy to it. To know you are going against some of the smartest people in the world, and when you do have an advantage, you are going against what everyone says. Everyone will tell you, now's not the time to buy. And your already existing assets will be down significantly. And everyone around you will be concerned because you will be in pain. You will be hurting during these times when you have an opportunity to gain an advantage. So what I tell you is, remember, calculate everything at all-time highs versus that time. Keep that number in mind. What you got in at versus what it's worth at the all-time highs. If there's not much difference, you're in trouble. If there is a very big difference and these assets are going to be around forever, remember, that is when you're gaining your advantage. That is called a margin of safety. Discussed by Benjamin Graham in The Intelligent Investor. Margin of safety. That's what you need. So, try and find those deals. Get in cheap. Get in when there's a sale.